go ahead and jump in. So welcome to our demonstration. This is a free and open call that we're doing right now. It's a beta environment where we're showing people the full spectrum of our system. And we're starting with these open calls that we've invited you to be on for free. And we also have a software tool that we'll be launching to where when we go live in the next couple of weeks, we will have our morning calls, and then we'll have a software tool that will enable you to look at trading opportunities 24 hours a day. And we'll also have calls as well regarding the software tool. Now, this will become a call that's exclusive to active subscribers once we launch. Everyone who gets on our calls is doing so at their own discretion. Keep in mind that all of the trading ideas that we discuss on the call are delivered to everyone uniformly for educational purposes only. We have no regard to an individual's trade objectives, financial condition, or suitability, and you should never interpret our call as financial advice. Trading on margin carries a unique and potentially high level of risk. By joining the call, if you choose to follow or act on any of the ideas that are discussed, you acknowledge that you're trading at your own discretion and you're fully responsible for the outcome of your decisions. Remember to never trade with money that you cannot afford to lose. Now, I'm going to give an overview, and then we're going to show how the call works, and we're going to discuss about how to properly manage your trade, right? Trade management is the key topic right now for this introduction. So please remove all distractions. This does go really fast. You will be seeing an MT4 chart that looks like this if you're watching this visually. And at this time of day, we look at an instrument called the US 30. That's a futures version of the Dow Jones Industrial Average. And on the coach's screen, when he shares his screen, you'll see green lines running across. That's called the buy zone. And you'll see red lines running horizontally as well. That's called the sell zone. Now, our strategy is really simple. After the market opens at 9:30 Eastern, if we see a green candle pierce through the buy zone, we may look to enter into a buy trade. And then the opposite in trading, of course, is always true. If we see a red candle that pierces through the sell zone, we may look to enter into a sell trade. Now, we are very patient because it's not just about a candle crossing a zone. That's not the only factor that builds confidence of a solid entry. There's a lot of factors at play. And so the advantage of being on the call is that you can hear from a 21-year trading veteran discuss out loud how he is trading his own account. And you can hear when he's patient, when he has confidence, right, to get in. So this is a great time to watch and learn. Now, every day is different. Sometimes the market doesn't give any clear direction. We don't take trades. Sometimes we take multiple trades. If we do get into a trade and the coach is sharing his screen, you'll see that he has stats on his screen that are changing in a profit or loss in real time. This is an interface and software that you'll get once we launch live. You'll get the same tools available to you. Now, let's get into risk management and talk about the importance of getting out of a trade, because getting into a trade is simple. It's one click. You click buy or you click sell, boom, you're in the trade. Getting out of the trade is more important than getting in a trade. It really is. And knowing how to get out, knowing when to get out based on your risk management plan is even more important than knowing when to get in. We always say this. Anyone can make money in trading. Anyone. You could have zero experience in trading. It could be your first 5 minutes of ever trading. And if you just know how to click buy or sell, you can make money, right? It's simple. That's not what we focus on, though, because we know how easy that is. Anyone can do that. What we focus on is the part that a lot of people don't develop the skill for, which is knowing when to get out. Okay, now an amateur trader cuts their loss, excuse me, if you were to take a note, this is what I would say the note of the day is: an amateur trader, someone who's new, someone who's unskilled, undeveloped, they cut their wins short and then they let their losses run, right? But a professional trader cuts their losses short and lets their winners run. An amateur trader, when they're in profit, they're nervous and scared, and they want to quickly close out to get the fastest amount of profit available, right? The fastest profit possible. That's an amateur trader. They're like, oh my gosh, I'm in profit. Let me hurry up and close because I may lose it all. It may go away. And then when they're in drawdown, they're like, gosh, I don't want to take a loss. So I'm going to wait till it comes back, right? That's how an amateur trader thinks. A professional trader is following a system that's proven, that they've used for a while, that they've practiced, that they're comfortable with, and they try to maximize their profit. So they want to be in their trade as long as possible to maximize profit. When a professional trader goes into drawdown, they're actually more inclined to close that trade as quickly as possible, not to wait around and hope that it comes back and to hope that the market recovers. That's impossible. You never know. You know, people get into major drawdown because they just think, oh, it's going to come back. It could go against you forever. It could literally go against you for months. I've seen charts trend in one direction for months at a time. So there's no end in sight. And that's why you can't just hope that it comes back. This isn't random. This isn't gambling. There's a system in place. So we look to grow the account by a few percent a day. But what's so important is you have to be willing to cut your losses at a few percent as well. So here's the part that you need to get before we look at the market is ask yourself, what percentage of profit do you look to close your trade? And guess what? That's your answer on the percentage of loss that you should be closing in drawdown. And so the reason we bring this up, for example, I've seen someone in the last 2 weeks, you know, they're new to trading. And so this is not, it's not a bad thing. It's just a normal thing. It's just the way it goes when you're learning how to trade. But I saw someone grow their account in 4 days by over 30% in gains, which, you know, we've said from the beginning, that's unbelievable. That's amazing, but it's not necessary. You know, it shows that they're probably using a lot size that's a little too high, or they're getting into too many trades and it's just going in their favor. So the gains are huge. But then that same person in just 2 days went back to break even. So think about that. It took them 4 days to make over 30%, which is crazy, right? But it only took them 2 days to go back to break even. That means they lost 30% in 2 days. So what does that tell you? It tells you that they're allowing their losses to run twice as big as their gains. So that means you're taking 1 step forward, 2 steps back. And in trading, that's an ineffective approach. As you grow your skill in trading, you'll actually reverse that to where you'll want to take 2 to 3 steps forward and only a half a step or 1 step back. And the way you do that is, again, you want your winners to be maximized and you want to cut your losses short. So the focus of today is that if you go into drawdown, you really need to know how much drawdown is what percentage of your account. And only you can see that. We can't see your balance. We don't know what you're trading. You're in full control, right? So if you have $1,000 and you're like, okay, my max drawdown is 3%, well, that's $30, right? And so you should know that if you're in drawdown at $30, if it goes to 31, you should be out of that trade, because if it goes further than that and you've been closing for a 3% gain, then you're just going to go backwards on your account. If you don't know this, then it's critical to start with a demo account. Okay, we show math on how losing once or twice a week can still grow and compound your account if you're following the proper risk management strategy. The last thing here that I need to hit on before we're going to pass the call to Coach Mo, we still have a couple minutes before the open, is this right here. We're using a risk management ourselves of about a 0.01 for every $1,000 in the account. Remember, folks, that's total. That's total. That means if you have a $2,000 account, then that means it allows for 2 trades at 0.01 because the total trade amount is 0.02. So it allows for 2 positions at 0.01, right? So it doesn't mean, you know, if you have $1,000 in your account and you're using the same risk management, I mean, you can't get into 2, 3, 4 trades. Sure, if it goes for you, wow, you can make 20% in a day. But we don't care about that because that's not necessary to compound. If it goes against you, it could be devastating, right? So remember the 0.01 per 1,000, that's the total risk size. That's why Coach Mo uses 0.01 times 5 on a $5,000 account. With that being said, I'm going to pass the call to Coach Mo. He could share his screen. Best of luck to everyone. We'll see what the market gives us today, and then we'll talk after the call. Thank you so much.
All right, welcome to the call, everyone. Today could be a winning day, could be a losing day. The market has already moved somewhat into the sell zone area. The market's been moving and trending down. If you notice, over the last day or so, the market has been consolidating for the most part and going sideways for the whole of yesterday. So I'm going to just be very patient on this particular session here and just see what the market wants to do. I mean, it could give us a good move. It might not. And again, this is not gambling. This is not guessing. And there's zero certainty when trading. There's no such thing as a guarantee or certainty. It's all about probabilities. So if you have a good technical analysis and you have a good system, then your probabilities are higher, and that's what gives you an edge when trading in the market. So that's where we're at. So if you look right now, we're about 10 seconds before the market opens. The market could shoot up here. It could shoot down. We'll see what the market wants to do. And based on what the market's doing, we'll see how we move forward. So the market just opened. Just going to be patient. Again, we might get into a trade. We might not. Let's see what the market does here. The market is basically staying in the sell zone at this point. It's in the bearish zone. Looking for some confirmation here. I want to see some strong follow through before I get into a trade. I'm not in any trades right now. The market's been struggling for the last day to choose a direction, so we'll see if it chooses a direction this morning. All right, we got 12 seconds left of this candle. Okay, I'm getting into a trade. I'm just being conservative. I'm in a sell trade. Let's see if this, if we can get a win here. I'm going to just be patient. I'm just going to be patient, see if the market can. Okay, we're in a cost average. Just did a cost average sell again. And we'll see if the market can give us a win here. We'll just be patient and see what happens. We're in about a 1.5% drawdown, 1.3% drawdown. The market's moving pretty slow. It's not really. Let's see if the bears can come in here and push it back down. We're just being patient. We're still in the trade. I'm still in the trade. I'm at about a 2% drawdown at this point. I'm just being patient, seeing what the market does here. Market's still in the bear zone area. Just trying to, let's see what happens here. If the bears can come in and continue this downward momentum it started with before the open. It's struggling. This is a very weak open today. And sometimes that happens. I mean, every day is a new day. We learn from every single open opportunity. Okay, we're in about a 1.5% drawdown still. We need some follow through, bears. Come on. Let's see you guys come through for us. All right, so at this point, the bears are coming in. All right, we're at a break even. Let's see if the bears can really get it back down to where it was before. All right, we're at about a 0.5% profit. It's creating what's called a range, which means that the bears and the bulls are fighting right now. So let's see if the bears can come through and give us a win here. It's in bearish territory, so it should be pretty good trade, but we'll see. If it doesn't give me a solid win, I'll just probably take a break even. Let's see here. Let's see if we can. All right, I'm about a 0.5%. Let's see if the bears can push it through. Come on, guys. There you go. We're at about a 1.5%. I'm gonna take some of this off the table. I closed a few of my trades. I'm still in one trade. So I'm still in one trade, but I closed the other trades and I'm still in one trade. Now it's going down. This is good. I'm going to stay in this trade for a little while, see if we can squeeze some more out of this. So I got out for a slight profit there, about 1.5 or 1 point something percent, 1%. And then we're still at a 0.5% on this one trade. So depending on how this candle reacts, I may just close it. We'll see. Let's see if we could squeeze out a little bit more profit this morning. I'm still in a sell trade. I'm just waiting to see if we could squeeze out some more profit. If not, then I'll just close it for a win. I'm being patient on my last trade here. All right, so we're at about almost 1% on this one trade, but it's struggling. So what I'm going to do is I'm going to close it at 1% for this trade here. All right, so we're up about 1.5%. I would guess maybe almost 2% on that trade this morning. Market was extremely slow, struggling today. So we made a profit today. So that was cool. Made a good, I'll calculate what my actual profit is, because sometimes when you're in the middle of a trade, it's hard to actually calculate. I'll tell you guys what I ended up doing today. Let me see here. So today, at 72, let's see here. Yeah, it did about 1.3% profit. So just about 1.3%. Not too bad. Would have liked to have made a little bit more, but you can only take what the market gives you, right? And so, I'm happy with it.
Real quick, yeah, Coach Mo, people are starting to flood the chats with their results. And first off, what I want to say is I'm more relieved to see a lot of 1.5%, 2%, 3% gains, 4% gains. That's such a relief to me as a trader. Then, the days when we started off, because a lot of people were new to risk management on their lot size, we were seeing like 10%, 15%, 12%, 8% gain. And I was like, oh, whoa, okay, wow. Those results are so crazy that I think people are either not getting out at a reasonable time and they're trying to really let it run beyond their goal, or their lot size is too high, right? We can't see what you're doing. We can only see what we're doing. But those are the only two possibilities, right? You're just letting it run too long, or you're using a lot size that's too aggressive. And so today I'm looking at the results, and even it looks like we're averaging 3, 4. I see some folks are at 5%. That's wonderful. That's actually a lot more manageable. And so what I want to do here, I'm going to share my screen real quick. Give me 1 second, folks. I'm going to share my screen. And here's what I'm going to do. I'm going to go to just what Coach Mo did. And okay, so here's what I'm going to do. I'm going to show you this because this is just real math. Okay, I I I want you to see the benefit of having a consistent plan. I also want you to remove from your mind, the thought of like you're gonna just knock it out of the park, right? You're just gonna hit a home run every day. Like just get rid of that thought. Okay, this is a lifestyle that goes for a long time, and we don't hit home runs every day, as you guys have seen, right? We go up, we go down. So here's what I'm doing. I just took $1,000. Now Coach Mo is trading on his demo account with over $5,000. I think he's up somewhere around about 9%, I guess, maybe total on his account. But what I want to show you is just with $1,000. Okay, so I'm bringing the example that we're setting for you all. I'm bringing that principal amount down, right? Because Coach Mo is trading with a $5,000 account. I'm going to bring that down to $1,000. And the reason is because that's more attainable and that's more conservative on risk, right? We're talking about risking $1,000 instead of $5,000. So it's less risk. Now I'm going to take his results for today, which is about a 1.3% gain. We go back every day and we look. Sometimes it ends up being a couple tenth of a percent lower. Sometimes it's a couple tenth of a percent higher than what we thought. We're just going to do a rough example here. 1.3% approximately based on the times he closed his trade and what the stats were telling him. And then we're going to look at this for 1 year. And I really want you, please, look at this. It's 1 year. And the truth is that 1 year is such a short amount of time. But what's funny about undisciplined lifestyles is that some people cannot stick to something for just 1 year, right? 1 year is a short time. And we're serious here. We're going to be here in a year from now. I want you to commit to you being here in a year from now because it's a short amount of time to give something a go, to really try to make something work. 1 year is short. Most of my projects that I've worked on with passion, I'll give it a couple years to see, like, is this what I want to focus on for the next decade, right? Give it a couple years. But so 1 year, 1.3% a day, and we're going to reduce the size to $1,000. I'm going to come down. I'm going to calculate this. And I want you to look at this. So look at the growth on that. Okay, this is just math. Again, this isn't saying you're going to grow your account like this. No, you have to have an understanding on the power of compounding and the way things work. So here's the scenario, if someone started with $1,000, they only achieved a 1.3% per day average growth. So looking at real life, that means sometimes they win 2%. Sometimes they lose 2%. Sometimes they win 3%. Sometimes they lose 1%, right? And so we're using this as a base average, 1.3% for just a year, which is a very short amount of time that goes by really, really fast. And I calculated that out. And look, the $1,000 account would grow to $111,000, right? That's 111 times growth. So you could take this amount and go more conservative to like a zero. Let's bring it under 1%. Let's say 0.9. And you could play around with this, right? This is the calculatorsite.com. And you could see just that little smidgen of a difference of 0.4, how dramatic of a difference it makes long term. And that's why you have to not only be conservative, but you also have to have some goals on not cutting yourself short either, because just a 0.4 in compounding takes this from 26,000 to 111,000, which is still, I mean, $1,000 account, growing to 26,000 in a year. That's still 26 times growth. And if you went to one last example, and then I'll let you speak up, Coach Mo. We're gonna do 0.3.
No, they were just wondering for the weekends to make sure you have the weekends off.
Yeah, for some strategies.
The thing
weekend,
is,
yeah.
So our scalper. Remember, you're all getting the scalper tool.
Yeah.
And I've been trading on the weekends, and I've been crushing it, and that's a fact. And we have tools that allow people to trade 7 days a week. So there's a lot of we've been taking polls in our chat, And the second most popular option for people who want to see live calls with the scalper is for cryptocurrency, which is running 7 days a week. So, we could reduce the days, but I'm just saying it's available 7 days a week because of the type of markets that you have access to with our tools. You look at a $1,000 balance, even just 1/3%, that's still, look at this. This is still 200%. 200%, folks. Like, I know that because we've been exposed to bigger possibilities, we think, oh, 200%, 1,000 to 3,000 at the end of the year. Oh, that's that's not amazing. I'll tell you this. I would go toe to toe with any of you on understanding compounding and having a reasonable outlook on what growth looks like and what you should be grateful for. I think this is incredible. If someone said, hey, Sal, I have this program that's consistent and reliable and we could get 200% a year in growth, I'd be like, what? 200% a year in growth? Oh my gosh, sign me up, right? So that's only at 1/3%. Obviously today, Coach Mo did 1.3%. You see in the chat, a lot of people did 1.5, 2, 3, 4, 5. And so I just wanted to take a moment to just cover that because, yesterday was a solid loss. And I try to talk to people because I know a lot of people are new and was their first time taking a solid loss and they feel like deflated. And here's the truth. I'm telling you the truth. Please listen to me. If you felt deflated after losing, it just means you lack experience. That's all that is. And we all lack experience until we're experienced, right? I lacked experience in trading. And so I used to feel deflated. And guess what? Now when I lose, I don't feel deflated. I don't. I've had days where I've lost thousands of dollars and I don't feel deflated at all. I actually feel fired up. I feel competitive. Like, man, I'm going to get back in there. I saw some chats today. People were like, man, I'm putting my gloves back on. Sniff, sniff. I smell victory, right? I read a comment like that. Man, that fired me up. That's right. You get back in there and you apply the system and you apply the system and you apply the system. There's nothing in the world that goes straight up. It's impossible. Everything goes up and down. And you have to understand how the world works. Listen, your emotions go up and down. The trees blow from the left to the right. The sun goes up and down. The moon goes up and down. The waves of the ocean go out and come back in. The blades of grass blow to the left and blow to the right. Everything in all of existence in the universe has a cycle to it. Nothing is constant in this world other than our own growth and expansion. But we label things as good and bad and exciting and depressing. You have to get rid of all labels. You have to get rid of all judgment when it comes to trading. You got to get rid of all the volatility and the emotions when it comes to trading because it's irrelevant to your success, period. You got to detach yourself, folks. And if you have an effective strategy, then you just pound the pavement every day, day in, day out, pound the pavement, boom, go again, get back up, go again. And we're showing you a system that we've been pounding the pavement every day. And after months of us pounding the pavement here, we said, this is too good to keep to ourselves. This is too exciting. This is too crazy for us to keep it all to ourselves. We need to share this with the rest of the world. And so, some people, yesterday was their first day. And they come in and they're undeveloped, they're emotional, they have no experience, they don't even know what a risk management plan is. They come in and see a loss and then they're all scared, right? And so we're going to keep addressing the reality and the sober-mindedness and the awareness that you need to have when it comes to trading. And what I want to do here, because we're already 17 minutes past the open, first off, I want to give a wonderful congratulations to Coach Mo because today's market open was weak. The volume was weak. There was actually some volatility about an hour and a half before the opening, and a lot of volume was played in the morning. And so, there was less volume coming in at the open to really push a clear direction. Coach Mo, you crushed it. Seriously, unbelievable on your patience, your fortitude, and helping to just show why you've been so consistent for so long.